Milton, let's set the scene here and talk about how this deal came together. Did Steven Mnuchin call you, or what was the initial first steps here?
So we were approached by the banker that was helping arrange this, who knew that Steven and I had a long relationship going back to Goldman Sachs, to see if we would have an interest. We obviously did, for several reasons. One is we have recently merged into us a real estate group called Pembroke, run by Larry Cohn, who had a very deep relationship with part of the bank and knew a lot of the assets in the bank. So we felt very comfortable that we could assess the risk very quickly. And secondly, we had been having a dialogue on the asset side with the institution. And so that was very helpful. And so when we got the call from the banker, of course, we were very happy to do that.
Now, this deal was pretty immediately in the money. $1 billion capital infusion quickly almost doubled. Since then, the stock has been pretty volatile. So investors are looking for a reason. Milton, what is New York Community Bank a year from now? How do you and your investor group plan to make it a profitable one?
So look, I think first, obviously Joseph Otting coming in, he's a very experienced CEO, having done this at One West. I think he's going to, work very closely first with the existing management team to assess the existing businesses. And then we're going to step back and say, okay, longer term, what do we want this franchise to look like? Because this is a very significant regional bank. It's more than New York City, even though the name says New York City Community Bank. And so we're going to try to, diversify and reposition the institution. And I think, look, it's a long-term project. So this is not something that you're going to snap your fingers and it's going to happen overnight. But I have high confidence that Joseph will get this directionally right in the short term.
This was only closed a week ago, yet you have investors already asking around the block, is $1 billion enough? At what point do you think it will get to the point that it may need more capital? Do you think $1 billion will do the job?
So look, I can't predict the macro and where the world goes, but I think based upon the work that we've done, Liberty did this independent of us, and then we came together to look at the results, and we were spot on top of each other in terms of our thought process. I think we feel very comfortable today, based upon the current view that $1 billion is sufficient. If that changes in the future, we'll put more capital.
I do want to talk about the role of private capital here. Is there a plan to sell some of these assets to private credit firms, and do they even want those assets?
Look, we run a private credit firm, an opportunistic credit firm, so within Reverence. So Reverence has got three businesses, right? The private equity business, which is focused on financial services. The second is an opportunistic credit business, and the third is an opportunistic real estate business. I think the answer is yes, but some funds will would like the multifamily side of the business. Some will like office, but at what they think is the reset value for those assets. And I think what the bank ultimately decides to do with that will be a function of how we want to reshape the bank. A bunch of this is going to run off and mature and refinance elsewhere. Part of it will end up, securitizing or selling into other pockets to take it off balance sheet, and in some part of it we will sell.
How much due diligence were you able to conduct on those portfolios before the deal? And now that you have a look under the hood, how bad is it? I mean, how much work is there to be done on this real estate portfolio, particularly the rent-regulated part?
So look, we did a lot of work on it. We substantially went through the bulk of 75% of the office portfolio. We went through about 25% of the multifamily, which is quite extensive when you think about a sampling. We also then took, and by the way, management and the bank was extremely helpful in providing us the information we needed. We stratified the business, each one of the multifamily by percentage of of rent control versus non-rent control, boroughs where they were located, LTVs, to come up with an assessment if we were going to sell the entire portfolio. So not a credit assessment, but a sale assessment. How much capital we would need, and would the bank be in regulatory compliance? And we concluded, yes, we could do that and still be in regulatory compliance. And so we were very happy with that as part of the commitment of the $1 billion. I would say, look, the thing that's misunderstood is the multifamily portfolio is performing very well. Right, and as we've gone in and done more work on the inside now with the bank, we feel better about it even than we did a week ago.
So really interesting color there, that the multifamily part of the business, definitely a bright spot. But I am curious to broaden out here and talk about regional banks as a whole. In your view, do you think that NYCB was a standalone event, or do you think that there are more shoes to drop when it comes to regional banks?
Look, I think if you go back and look over the last 5 years, a lot of the growth in banks has come in the real estate area, right? And so people will have to adjust their portfolios, take reserves. I think rates starting to peak and coming down over time will be helpful to that. And most banks will be able to work through their issues, including New York Community Bank. The smaller banks will need to raise capital, and there's lots of bankers out there who want to help them do that.
Yeah, to that note as well, you were mentioning how commercial real estate is really part of the problem here. Let's be conservative and say you're only going to get 2 rate hikes this year. In that scenario where there are interest rates still higher than expected in entering the year, how much more damage is there in the property sector that can start to impact these banks?
Well, look, I assume you meant rate cuts as opposed to rate hikes. I think the rate cuts are helpful, right? I think most people understand today what the occupancy looks like in these buildings. People are coming back to work, but not as fast as in some geographies as they would like. And so, but I think people have a good handle on what the operating expenses are today for these businesses, what the NOI is on the buildings. And so I think you will see banks, slowly but surely start to take the incremental reserves if they need them, and frankly start to interact with their borrowers on how to refinance the existing portfolio. Some of them will require more reserves than others, but today I think I don't see any catastrophic events in the banking system, given the amount of capital that sits in the banking system today.
Milton, you have 30 seconds. Do you think that there's another $1 billion deal out there?
Well, I'm sure there is.